Let's have a look at shares in Tenaz Energy. They were higher today. Whoa, look at that, 15% after the Calgary-based oil and gas company announced a $140 million private placement offering of senior unsecured notes. It also came out with Q3 earnings. So it's raising cash, and this could set Tenaz up for more acquisition opportunities. This is fresh off that July deal in which it agreed to buy a Dutch gas firm, NAM Offshore, for 165 million euros. We're joined now by Anthony Marino, President and CEO of Tenaz Energy, an oil patch veteran. Anthony, it's great to see you. Thanks very much for joining us.
It's my pleasure, Andrew. Good to see you.
This is your latest company. You have an international focus. Can you tell us, where are you producing right now, Anthony?
We produce about 2/3 of our oil equivalent production in Canada and about 1/3 in Netherlands. Netherlands' position is non-operated, all TTF gas in Europe.
Oh, I said international focus. I forgot about the Canadian assets. What is the game plan going forward, though, Anthony? Are you going to be outside Canada, or are you agnostic?
Well, we're primarily going to be outside. Just briefly on the Canadian asset, it's a very good oil growth project, highly economic. It'll grow and throw off free cash at the same time, but it's not really the basis, not large enough, I'd say, for an intermediate-sized company. The emphasis is going to be overseas, primarily in Europe, also probably Latin America, and with some potential for additional transactions over time in Canada, but it's definitely a tertiary area for us.
And of course, you were 4 years CEO at Vermilion with its international, its global focus. Do you think you'll go as far afield as Asia this time?
I consider that improbable, at least in the early phases of the company. I think that we would be, sticking with Europe, Americas, possibly Middle East, North Africa, but Asia and Australia probably a little bit too far afield for us. We don't have a great deal of experience in those two areas.
Right, and so you've sold these notes, $140 million. Are they convertible for equity, or are they straight for debt in that sense, Anthony?
Yeah, Andrew, they are straight debt. 5-year paper, 2.5-year non-call, 12% rate, priced at par.
You did at least one acquisition in Europe from Exxon at a very low price, partly because a huge company like Exxon, they just don't have enough management time to watch smaller projects. Is that kind of your game plan? You'll be acquiring assets that are sort of orphaned by big producers?
I would say primarily that's probably the best source of assets for us, and for exactly the reasons you talked about. For these bigger companies, the focus is just not there, and some of these midlife to later life assets can't move the needle for a company making multiple millions of barrels a day, and so that's where there is, I think, good value for us.
Are there many other players doing this? I haven't heard of many other companies, but maybe they're more commonly listed in Europe, companies acquiring assets in different jurisdictions like this.
I mean, there are a few companies that pursue it. Typically, they're not real well capitalized. Oftentimes, they're not really set up to operate. Maybe they don't have the operating experience. Maybe they don't have the regulatory experience, safety, and sustainability. We feel that these are the elements that we bring to the table, and it's why typically when we pursue these deals, oftentimes they're negotiated transactions, maybe no competitors, or if they start in some kind of bid process, maybe one or perhaps two adequately funded and really credible competitors. It's really the key in M&A is to keep the number of competitors low. This is where you end up with a higher rate of return transactions.
What would be your model? Do you think you'll be a high dividend payer as these assets mature, Anthony?
We do believe in returning cash to the owners from the free cash flow stream. I think in the case of the NAM Offshore BV that we've acquired from NAM, this 50-50 Shell Exxon partnership, It has a large number of reinvestment opportunities that really haven't been pursued for the last 10 or 15 years for the reason that you mentioned a minute ago. Really couldn't move the needle for Shell and Exxon. So with that large stream of reinvestment opportunities, I do expect a fair amount of reinvestment of the free cash at the beginning. The uses of the remainder would probably be maybe to build up some cash, additional cash in the company, dry powder for additional acquisitions, buybacks of stock, which we actually already employed even in the first couple of years of having Tenaz. We bought back 7% of the shares, and we haven't done any kind of issuance of equity into the market. And I think at some point we will have a dividend as well. I suppose when the dividend does occur, it'll start at a low level and it'll modestly build over time. But I think all of these uses of the free cash are certainly going to be in the within the alternatives that we might choose, and we are going to reinvest in those non-offshore BV assets, the NOBV assets, because there are a lot of high return projects that just have not been pursued for a long time there. It's a very high priced gas market, over $18 Canadian per MCF right now, and a lot of projects are highly economic. I think we can turn that production curve upward.
Anthony, before we let you go, you did your Bachelor of Science in Petroleum Engineering in Kansas. You worked for U.S. companies, Atlantic Richfield. You've had a rich career. You headed up Baytex Energy. The return of Donald Trump to the White House, will it mean big changes for the energy industry? I mean, U.S. production has grown just fine under President Biden.
It has grown a lot. It's at a record level and for both oil and gas. I mean, it's, I think from a macro standpoint, there were a lot of proposals that were made kind of late in that campaign. I don't know how many will actually be implemented, but, I mean, I don't think it would be particularly advantageous to go with a high tariff or a trade war program. I think the U.S. needs labor, so I don't know if broad deportations would be positive. The U.S. has big deficits already before expanding them, and even before really also expanding the availability, I guess, of crypto in the country. So I think there are some risks that are introduced by this. How many of those will actually materialize in the end, I don't know. The product price impact, sort of hard to know. If we do head into a bit more of a stagflation scenario, if, say, that whole slate was implemented, then perhaps the nominal prices in USD terms would go up. I'm not sure what the impact on real prices would be. So I think there's a lot of uncertainty about how much of that program would actually be implemented.
Thank you very much indeed for joining us, Anthony. Anthony Marino, CEO of